Hello, this is Imi again. So yesterday we talked about DAX. I was going to talk about the trades of yesterday, but I ended up talking about the trades of the day before and called that the how to trade the sideways market. So that was the 5th of November. And as you can see, it was pretty sideways. And it's important to understand what is a sideways market. It's important to understand right at the beginning how you can actually assess if it is going to be a sideways market or not, and then to stay out of it. And sometimes you can actually trade inside it. So that's not the topic for today, but today we're going to look at the trades on the 6th of November. But before that, let me take you to the overall. So we'll go to the hourly chart, and as we can see, we have a beautiful setup one, which if you were to trade it, the idea behind this is to wait for a wave 3 and wait for a 4. That's the setup 1. Wait for the dot. Your entry would be here, stop loss here. Now it scared you a bit, almost hit your stop loss, but you stick to your rules, don't you? Right? You don't get out, and if you did that, you would have probably added on there. If you did, you'd have another scare again, but you wouldn't have got out because it didn't stop below. Price didn't break below the box. You still stay in, and today it went all the way up. So if we were to count the Elliott wave for this, which luckily for us, it's already been done. So if we say this is 1, 2, and this is 3, then we can say this is 1, 2, and 3. So this is 3. So normally, I like to, when there's a flat wave 4, I like to start my fib expansion from where I think is the start of wave 3 within the whole sequence of 3. So if I do it from here, it shows me that it's hit target zone 1. But ideally, if I show it from here, which is literally like where it started to grow back up, then it shows that there's still more space, and probably there is. Anyway, so the 5th of November was this, and that's where the market is sideways, right? But you could have predicted it. If you looked at this and you have a very strong 3, and if you know the 3, 4, 5 rules of our system, you would know that in the market, when you have a 2 to 3 days wave 3, it will most probably be followed by 1 to 2 days of wave 4. And here, this whole day was wave 4, while the peak of 3 was coming back to the 0 line. And when it crossed the 0 line, the first dot here, the minimum requirement for wave 4 was confirmed, and that's where you had the setup 1. So this was a perfect setup 1 because you had a 2 days or a 2.5 days wave 3 with 1.5 to, I think around here it would be counted as almost 2 days of wave 4, and you enter here, and then you have a day and a half or a day or a day and a half worth of wave 5. So that's perfect sequence. So when you have the hourly chart within the 3, 4, 5 pattern, within the setup 1 pattern, then inside you can do the prediction. So the other day I had an idea that this could be turning into a wave 4, so I marked it like this. Please check my yesterday's video, and market did stay that way. But then come the 6th of November, and now let's go to the M5 chart first. And this is where it opened, and it tried to break this area, which was the range of yesterday. If you look at the video as well, it's visible here. It was immediately rejected at the peaks, and price went back. But it still was a setup 1. It was still the formation. Why? Because when we establish the wave 4, and this is an important point, you establish the lowest point of wave 4, and that is where the lowest box level is. If price does not break that, you're still in that same formation. You don't get out, and you want to benefit from that same trade. So anyway, if we were on the M1 chart, what you would have seen is that the market broke down first and then went up, and then came back, and now here you had your first setup 1 indication. Now this is not a setup 1 by the 2017 rules. This would be, but we have a slightly different strategy for trading the DAX at the open, so which we call the low bot strategy, and I haven't explained it yet, but I will in a video explain what is low bot. Based on that, we had a trade here, nice lovely setup with 10 stop loss, 20 target point, nice and easy up there. So it goes up, then comes back, and this is what we call the B trap. You got B trapped here, and you got B trapped again, and this kind of gives you an indication that the market does not want to go further. So let me just put a box in this and make a relation. So if you look at that yesterday's analysis in that video that I posted yesterday, market came multiple times and hit this level. Actually, let me just bring that to this picture where I marked that sideways. So as you can see, it's hit it so many times in that box. And there is a great lesson here. When the market organizes itself into a range, it tends to persist. Just like when it starts to trend, then it tends to persist. So this is the area. And once again, on the next day, when price tries to break it, it's rejected and price goes down again. But does it matter for an M1 trader? Not really, because what we do is we just look for our setup. And our setup was simply this. So you had this one entry. If you were in stage 1, it probably didn't see it as setup 1, because for setup 1 you want to wait for a 3 and 4, like I explained earlier on the hourly chart. But if you're in stage 2 and you have started applying the hunt signals, now if you had the hunt aggressive setup, you would have your first entry here, because the hunt aggressive setup, and let me actually put it on. Sometimes I do this. Well, I've been doing it for 10 years, so I have different options. I have 4 main strategies that are all available to me, and all 4 strategies have 11 or 13, sometimes you can say, different entry systems that I can apply. But the bread and butter is the setup 1, and hunt is built on the setup 1. So basically a hunt signal is a setup 1 of a 5 times lower time frame. So what it means is that this cherry, if you were to go to a 12-second chart, you would see a 3-4 setup 1 on this. You definitely see a setup 1 in this. So when you're on M5 and you see a hunt signal, let's say something like this, you would see something happening. Well, this is not a very good hunt signal. Why? Because we don't want to take a hunt signal after a very strong spike up. Anyway, so those are the hunt signals. Let me just. I digress a lot, I know. Let's go back to the morning. Yes, so here is your first entry, which would be here, stop loss up there, and you easily just let it run. If you follow the box trail, you have gained yourself nice 36 points with a 10 pip stop loss. Let me go to my history and see and bring those trades back. And yes, I am going to show you some trades, and you are gonna like it. Actually, what I'm going to do is to show it to you one by one. There's a pattern that we call Scooby that I was talking about earlier on it, but you'll probably be able to see why we call this the Scooby. You have the ears here, you have the snout here, and you have the big neck here. And if you invert it, it's going to be this. Literally, if you just inverted this, you'd still see it. Anyway, so I was showing this, and as I was talking earlier, this was the hunt signals, but aggressive. Probably useless to talk about it right now anyway. So I was building this to actually show you something else, which is when I was trying to make this funny picture of what is a Scooby. So here you can actually see inverted Scooby. So you have these ears, the snout, and this is where the B trap happens. This is where the B trap happens. Why is it called a B trap? Is because what we think is that sometimes you have the ABC pattern, and the ABC pattern would sometimes be this, down and up. And if it turns out to be an ABC pattern, this would be the B wave, right? And within a B, there's also an ABC. And so in a B trap, what happens is that the A comes down like so, the B goes up. This is the B, right? So inside the B is ABC. So within the ABC, the A comes down like this, B goes up, C comes out, pokes out around here. So it's poking the snout of the Scooby, and then price goes up. And this then turned into something. This is why I like the Scooby pattern and the B trap. So the PC, the Scooby, and the B trap, they're all interconnected patterns, which we teach you when you're in stage 2 and 3. Stage 1, you just start with setup 1, because that's the core pattern, and everything else is built around that. And the setup 1 is built on the foundation of the 10-second Elliott wave. So I'm going to show you our reversal technique, a complete entire different strategy which we apply in stage 3, and that's called the fruit strategy. I've traded it for a number of years. I traded on M1 as well. Now what I do is that I sometimes apply it when I'm on this template usually, and when I feel like there's a time for reversals. So what I'll do is that only apply it when I want to trade a reversal pattern in the direction of the higher time frame trend, and that's why I showed you the hourly chart. So if you look at this, the formation of the trend was up, and when price came around this area and that range that I talked about, so this is important to why you should watch that video from yesterday. I hope I remember to put the link in the description so you can see why this helped, because yesterday's analysis was on the range, and then price comes back to that range right around here, and then when you go to the M1 chart, you'll see that this is where I was talking about the Scooby pattern, and the Scooby was not a success, but it marked the midway. That's also what it does. So it marked the midway of a 3 down, and then around here, see where it bounced. So let me just go to the hourly again, and I will recreate that blue box which we played around with earlier in that video. And now let's go back to the M1 chart, and you will see that it bounced around that same range and the trend is up. So I had an idea to say, and I thought, okay, we could take a fruit reversal which would be in line with the possibly next wave 5 coming up, and if there's an impulse in there, it might work. Plus fruit works very nicely in range bound markets, so you can take the trades when you identify the range from the top of the range to the bottom of the range, and from the bottom of the range back to the top of the range. So if I applied the fruit template here, I would be short here, long here. So now what I'm going to do is that I will leave this chart here. See, so that's where the original fruit signal is, and I can see it on this chart now. But when you first start to learn to apply the fruit method, you're going to start with the fruit template. So here's the fruit signals. You have a nice angle, Gator is going that way, you take your trade, and this is difficult part. A lot of people will get out here and they probably will get back in. I would just stay in with stop loss up there and add on here, stop loss up there, and just let it be, and it will come all the way down. And then when it's diverging, and now there's a little bit of angle here again. So what I did is I went long here. I was a little bit late, but I did go long anyway. And now let me show you the picture. So this picture is not from right from the first start, but that's where this is where my entry was. So this was a market order because I was a little bit late. The ideal entry should have been here, but this was just like 2 points late, but it still was a good formation. So entry was there, stop loss was here below the low of the fruit, and then at the there was an add-on signal which is called the momentum add-on. It started here, and then the box add-on started here. And around here you're fully invested, so a whole of 1.5 or 2% risk is there, and now all you have to do is trail the box. You don't trail the lines at this stage. The lines come into play only when price is below and Gator is open to down. So if you made an entry here, those lines are relevant to you. Well, we have the box. Box is better than these lines, because box is based on the structure of the market. It's concrete information. It's non-repaintable information. So box don't repaint. It's always there. Moving averages can repaint, because if price has a sudden change, then it's only right to recalculate that, and it would change things. So that's that. And this is the picture I posted in the chat room, because I like to teach using these examples. And so here now I've moved my stop loss. There's no risk at all. Now all I have to do is for market to go up so I can bank my profits. And then the next picture is price actually has gone up, and I don't know if you can see it. Yes, so the two trades are making about 400, 339 something. And then the next picture then shows, I was trying to add some nice fancy tags to it, but I think I just stopped then. So here I took profits on the two add-ons, which turned out to be wasn't the best decision, but it's always good to bank profit after waiting all this long, because in fruit mechanism you end up waiting quite a long number of candles wise as compared to the hunt signal or the setup one, because it gets you in at the best spot where the trend turns around, and so you wait for the whole trend to turn around and then ride it. So yeah, the profits were taken there, but then it just kept going. So then there was a box created, so I put my stop loss there. That was the running trade, and I think it got stopped out there. Now I'm going to show you the same chart on the normal setup 1 template. This is the setup 1 template. Yeah, same trade fruit campaign started here. You have your momentum add-on and the box add-on, and then trailing the box. So that's then the end of it. When price closed below the green line, I have the black dot exit signal, exited here. Now it would have been a lot more fun if I had kept all my add-ons, but that's the game, that's the art of it. You don't want to give back all your profits. You want to always bank something and still increase. So even then, about 643 on the first, 383 on the second, and 334 on this one. So this is basically the first entry, that's the second entry, this is the third entry. And so this is how I got it. So once you get to stage 3, if you have gone through the stages properly, the first stage, setup 1, you really nail that down, how to trade a setup 1. Then within the setup 1 pattern, you apply the hunt signals, and you learn the hunt as well, and then eventually you learn the fruit method. Some people go straight to fruit method and then start trading the fruit method. It's their thing. Not many people, but they do it. Fruit is a highly profitable strategy, but it's stressful as well, because you have to stay through those trades like this, and you have to select. There's a lot of art involved in fruit trading. That's why I put it at stage 3, because stage 3 and beyond is the art of trading using the science of the fractal geometry of the market. I hope this was helpful.